Wednesday the 10th of May. Let's get the briefing underway. Probably best off starting with a bit of a recap of how things finished yesterday in the US session, then Asia overnight, following through into this morning's main headlines. Overall, in the States, as per usual in terms of the S&P, a very flat finish, pretty much unchanged. But the Nasdaq did outperform once again. If I just actually bring my chart over and you'll be able to see. Did come, well, if you look at the actually more longer dated in the Nasdaq, this really steep incline that we've been on. We obviously saw last week the actual Nasdaq composite reaching 6,000, so fresh all-time highs. But the Nasdaq has been on a really nice upward trend over the course of certainly the last 2 or 3 weeks. A lot of this, obviously, we're talking about at the time on the premise of the corporate tax cut and how that would be highly beneficial for a number of these tech-oriented firms which have large amounts of cash sitting offshore, i.e. outside of the US. And this commitment from Trump, not just about the 35% down to 15%, but it's the 10% for multinational companies to repatriate their flows back into the US. That's going to be extremely favorable for some of the big tech giants like Apple, Microsoft, Google, or Alphabet, and so on, that's seen this Nasdaq performance really outperform. One of the biggest stocks, or the biggest stock in the world, Apple, saw another strong day, and I've got a bit of a quiz question for you this morning. Let's see if anyone can remember. So, can you tell me why in the film Forrest Gump doesn't need to work after he's left the army? Anyone know the answer to that question? Testing your movie knowledge, so Vass, I would be expecting you to know this. Why does Forrest Gump never need to work ever again after he invested his money from the fishing industry? Yeah, Bubba Shrimp. So after Bubba Shrimp, he invests into Apple. Now, this is the letter that's sent from the movie, from Apple to Forrest Gump. So he invests in the company back in 1975. How much percentage gain do you think that he's made since his investment in 1975, if it was a true fact? How much percent would you say his stock is up? Any guesses?
80.
Okay, got a couple. Anyone else? Any other takers? Okay, getting there. Okay, his stock is up a paltry 35,000%. Not a bad investment from Mr. Forrest Gump. If he's still alive out there, he's certainly, if he's still holding that stock, he's done particularly well. But I point this out because Apple's breached a monumental kind of marker for the first time ever in kind of American corporate history. Market cap moving through 800 billion for the first time. Now, if you look at their share price, it's just absolutely phenomenal when you're looking on slightly longer dated here. I remember only around a year ago, people were talking about the demise of Apple, how they were or the innovation was lacking, how they were having a big pullback in their Chinese, Indian demand, so in Asia, which is a key area for them. They moved back under 100 at that point, and they've only just added they've pretty much another 50% on top of that since that point. But obviously the introduction with the iPhone was an absolute game changer for that firm, and then their price, obviously 1975 would be right at the inception of the firm, where Forrest managed to get in. I have to see if I can get him on the phone for a live interview. But back to business, the Nasdaq then being a big outperformer. Looking at the S&P, and what we've got here is a little bit of volatility just before the market closed. Let me just highlight that for you. came with this candlestick here. It was the final kind of going into the last half an hour of trade before the closing bell on Wall Street. And why did this happen? Well, there were some headlines that came out, and it was almost as if the geopolitics, which was such a dominant theme of financial markets only a couple of weeks ago, has kind of completely taken a back seat. But North Korea came back to the headlines last night. This chap was commenting, so this is North Korea's ambassador to the UK, basically in an interview to Sky News, said his country would go ahead with its 6th nuclear test at the time and place of its leader's choosing. This quickly circulated around the market and had a brief, albeit fleeting, bout of nervousness, which did prompt some fairly aggressive selling just before the close, but prices were recovered. Obviously still nothing concrete has happened, but the verbal threats still remain quite acute from North Korea at this point. The bigger news, though, probably the more dominating, has been another change of heart from the president. So last night, and it's been kind of really filled the press and certainly Twitter, has been Donald Trump has fired the FBI director Comey amid the Russian meddling inquiry. Obviously timing is very suspect here. Trump and his administration have said it's nothing to do with the fact that the FBI were investigating Trump's ties to Russia in the pre-election campaign. They've said it's to do with Comey's investigation into Clinton. Obviously the thing that's raised eyebrows here obviously is the timing. The fact that he should have done this really back several months ago at the beginning of the year, to bring it up now in the midst of an inquiry in the FBI into Trump over relationships with Russia, obviously carries some connotations for what people are talking about this morning. The main thing here is, I'm not going to dwell on Trump, on what it means politically too much, but the bigger picture here for financial markets is about, obviously people are going to focus on this, whether or not it's a delaying tactic purposefully by Trump to deviate, I would say, media attention towards this, so to buy himself more time on the likes of the repeal of Obamacare, to get together more details about the corporate tax issue, fiscal infrastructure projects, so on and so forth, the more important facets of his policy that the market certainly is waiting for. I think the market, if anything, has been a little bit disappointed more in the timing. It just, if anything, delays what the market wants, which are these corporate tax and fiscal reforms. This is just almost a sideline show which is going to cause a political storm, and it means that we're not going to get what we wanted as quick as we wanted it, in terms of a market perspective. This morning then, dollar's a little bit weaker. The dollar index is down about 0.1%. Certainly that's helped cable get back up towards the higher end of its range that it's been in more recently. If we start looking at cable, 130 getting challenged again very early this morning. That's already been defined as the kind of top end of this move higher that we've had since Theresa May called the snap election. That obviously came on the 18th. That was that big rally where the general perception here is that she can acquire more control, stronger mandate, greater flexibility in negotiations with Europe. Hence the pound appreciated so aggressively back on the 18th. We kind of held that consolidation pattern for the days thereafter, managed to break that level, and we've consolidated really in this new range between 129 and 130 more recently, and we're testing the upper bound of that again. So 130 is still a very big level to keep an eye on today. We're very close to it. That also coinciding with around the R2 level, which would be seen at 130.06 as well, which is not too far away. From a sterling perspective, obviously tomorrow is a big day for the pound. It is Super Thursday. Not that we're expecting too much. Certainly no interest rate change, no change to their asset purchase facility or their QE program. But it is a quarterly inflation report release, which means we'll get an update on GDP, but inflation more importantly, and what is their forecasts for that going forward. Couple of interesting comments from a fairly influential think tank in the UK, which is NISA. They've said sterling's rise since the PM called the snap election last month should help limit a surge in British inflation this year, although it will still sail far over the Bank of England's target. Don't forget, I think I'm right in the number of 2.8% is the current peak of which the Bank of England's 2-year horizon kind of inflation forecast. That's where they see it peaking before then coming back. In terms of NISA, they've always been slightly more aggressive from where they see it. They're looking at 3.4% as the peak at year end. So they have lowered their forecast slightly from around 3.7, which they previously saw at the last time we had a quarterly inflation report back in February. So obviously the pound actually, and we'll talk about this more tomorrow, the pound actually weakened on the last Super Thursday we had. That was because the Bank of England actually hiked GDP forecasts, but that obviously is completely as expected by the market. It's because the Bank of England was so pessimistic when we initially were producing forecasts, or the bank was, post the EU referendum. What actually happened was they left broadly unchanged their inflation outlook, where most were expecting them to upgrade that, and that contributed to some aggressive sterling selling in the immediate aftermath of the last Super Thursday. So this time round, you'll be interested to see whether or not they move the goalposts on that particular measure, which is certainly probably the most important factor in which people are looking at from a policy setting point of view. Okay, a few other things to be aware of. Just taking a look at crude oil this morning. Pretty quiet. It is slightly positive. It's up about 34 cents. Did see a little bit of a move higher as Europe came in this morning, but it has failed to sustain that thus far. But really, it's this move higher at 9:30 that you need to be aware of. This coming after the release of the API weekly crude oil inventories, this being the precursor then for the Department of Energy numbers we'll get later on this afternoon. And as you can see, the chart's telling you then that it would have been a bullish report that we had last night. Now sometimes, if it is a super bullish report, often what you get is a fairly quiet Asia-Pac session where the volumes are typically quite light. Then Europe comes in, those volumes start to pick up slightly. UK European traders react to the information from last night, and maybe you get a bit of a secondary push. Hasn't quite materialized as yet, but let me show you the numbers. And certainly it was quite surprising, the size of the drawdown in the crude headline from last night. So we had a crude API drawdown of 5.789 million. The expectation was for a drawdown of 2 million. So a much larger drawdown than expected, and in fact the largest drawdown in the headline crude figure since 2016. Hence then that drew quite a lot of attention and prompted that move higher upon the release last night. Cushing was expected to show a very slight build, was in fact a drawdown of 133,000. The only caveat here was gasoline, which had a build of over 3 million. Expectations were for a build of just over 300,000. So the gasoline number was very bearish. Distillates was a draw of 1.174 million, almost double consensus. So the headline crude, I guess, statistically is important, given we'd have to go quite far back the last time we were seeing this type of size of drawdown. Cushing, distillates all going the way of giving the market an upside bias, but slightly negated maybe by the gasoline figure, which was very large in its build. So this will be your reference point for those numbers, and as per usual we'll be looking out for those later this afternoon. But keep an eye on oil. Now that it's above pivot, it would be interesting to see, and sometimes you do get this occur through the morning, particularly when the US start to come in, so around kind of midday, there's a little bit of further pre-positioning if the market feels that this was a pretty bullish setup from those numbers, and then you get almost that buy the rumor, sell the fact type reaction then when the numbers come out and the DOEs reflect a similar story to the APIs, which is often the case. Okay, other things just to be aware of from overnight in China. This really hasn't had much of an impact, so I'm not going to dwell on it too much. But so you're aware, this is the chart between producer price and consumer prices in China. The CPI elements being relatively consistent, just above 0, whereas producer price index has really soared ever since the back end of 2015. However, the most notable thing here is that Chinese producer price growth has moderated further last month from its 8-year high that has been seen. Slight uptick in the consumer price gauge, given that healthcare costs have bolstered consumer inflation. One thing to keep in mind with this really sharp kind of divergence between the two readings is when you start looking at things like steel, industrial metals, which obviously someone with a growth rate of China, or market participants tend to monitor quite closely. The slowdown in producer inflation has been particularly sharp for steel, prices for which rose 22.3% last month. Still far more quicker than other categories, but down from February's year-on-year jump. Steel prices were going up back then 40%. Phenomenal rates of price increases at that point. So it actually has halved from where we were just a couple of months ago, hence a slight pullback from where we are on the PPI measure. Okay, a quick look at the calendar for today. Running through the morning, some French figures have already come out. They're really largely insignificant from a broader market point of view. Certainly not had any impact on any of the assets that we'll be monitoring. Looking forward, very quiet actually, not a great deal on the docket. You do have import-export prices from the US, a measurement of small business optimism, that being the NFIB figure, will come out later on at 11 AM. But again, this is much lower down the pecking order for market importance. And then your crude figures as per usual at 1:30. What is interesting, potentially, you do have ECB member President Mario Draghi is speaking at midday and speaks on the impact of monetary policy. Now, just had a look on the media agenda on the ECB website for the details. So it's an exchange of views with the President on the impact of monetary policy of the ECB in the Netherlands. It's at midday. Remember, this is an hour ahead, it's CET. And text will be made available on the ECB's website. So what that means from a preparation point of view for when you're trying to interpret the headlines when they come out, unlike a kind of live delivery like an ECB regular press conference, the news agencies will likely already have in advance his text, which will be embargoed for a release time of midday London, 12 o'clock, and then you'll get a drop snap down of comments that will come out. As far as I can tell from here, it does not look like there will be any Q&A. So you're kind of looking at 12, you'll need to be switched on, even though he's talking about the impact of monetary policy, so not specifically maybe guiding on the future, but I would say you want to be out of any kind of euro exposure when he hits the tape at midday. So just a word of caution around that on your calendars. Rosengren is speaking later on the economy. Actually, if we just have a quick recap of some of the comments we've had out of the Fed of late to keep you up to speed with kind of the Fed outlook. You've had 3 speakers in the last kind of 12 hours, one of which is a voter, that being Kaplan. Typically has a neutral stance and very much sticking to that theme. Baseline view, 3 rate hikes this year. That is completely what I'd say is the main communication as a whole from the Fed. They still remain on track. That would be 2 more rate hikes this year, given they already delivered one in March. On the more hawkish side, Rosengren, who is a non-voter, has talked about favours beginning to shrink the balance sheet relatively soon. Pretty similar to Fed's George, who kind of is one of the most hawkish, saying the Fed should start reducing investments this year in longer-term treasuries and MBS. So again, this idea of shrinking the balance sheet. So hawk sounding hawkish, the neutral sounding neutral. Nothing really particularly surprising here, and hence hasn't really had much of a read across into market prices, so to speak. Just having a quick look though on the charts to finish up. T-notes just breaching or testing, let's say, the highs that were seen yesterday, so maybe just worth keeping one eye on. Having a look at Bunds this morning, relatively quiet trade, nothing really too much to speak of as yet. Okay, going to leave it at that. I'm sure your briefing for this morning. One thing I would keep an eye on, it was seeing a bit of a test late yesterday afternoon. It's really failed to make a more definitive break as yet, but that 109 handle in euro dollar I'll still be keeping a watch on, given that previous support level, the kind of profit taking on the move through 110 post Macron victory, and this emphasis, like we've just been saying, the Fed remaining on track means that maybe you might get a bit of a return to more neutral pricing, which could be a bit of a pullback on this first round gap up that we saw in the euro pair. One thing that might have put a bit of a hiatus on any potential 109 break and have pushed around back towards that gap low is the fact that Trump and his FBI investigation, so maybe a bit of weakness in the dollar might negate that trade for the time being, just given the delayment it would mean for some of his more far-reaching fiscal plans, such as corporate tax and so forth. Okay guys, have a good session, just coming up to 9 o'clock, and I'll see you in the chat room. Thank you very much.